Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are excited to be joined by Ben Gagnon. He's the CMO or Chief Mining Officer of Bitfarms. This company has received a flurry of headlines, press, media, news recently. There's a lot going on at this organization, and we intend to unpack and discuss all of that in today's presentation. In addition, we've got Q1 earnings and hot off the press, May production results that just came out this morning. Now, before we get into all that, please take a second, smash the like button, you guys. It takes 1 second and it's 100% free to do. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you think of today's discussion, if you're currently holding shares of Bitfarms, and your outlook for the back half of 2024. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've welcomed back Ben from Bitfarms. Highly anticipated interview, you guys. There's a lot going on in this space, a ton of headlines in relation to Bitfarms over the last few weeks, and we're sure excited to get in today's discussion. Anthony, Ben, thanks so much for being here.
Yeah, thank you for having me, guys. And sorry I've had to reschedule over the last couple of weeks, but I'm really glad to be here and speaking about all the great progress we're making.
Great to have you on, Ben.
Most definitely, Ben. It's always great to have you on the program. We've got a good collection of questions from the audience here. Of course, we understand the reschedule in light of all the news, so we'll get right into it. Initially, we were going to ask some Q1 earnings highlights, but I know you just came out with your May production results this morning, so maybe you can walk us through some of the key metrics or highlights since our last discussion.
Yeah, sure. I think the first metric to latch onto is we have 9.5 exahash installed. Now, Paso Pay didn't come online by the end of May like we were originally anticipating. There's still a few more tests that need to be performed by Onde, which is the state-owned utility there, and a few more small engineering works that need to be done. But we do have 2 out of 3 exahash installed and tested and ready to go. So when those engineering works are completed, that's going to be a very quick increase in our operational hash rate. The second big number to latch on to there would be the improvement in efficiency from 31 watts per terahash down to 27. So, what we've shown here just in the first 6 months of the year, we've seen a dramatic improvement in our energy efficiency because we started the year at 35. And I think a lot of criticism was kind of pushed out to Bitfarms for being on the low end of the efficiency scale. We are at 35 watts per terahash. We were definitely on the low end of publicly traded miners. But we did all of that for a reason. We did all of this strategically because we did not want to, rush an upgrade of miners when we didn't think it was a very cost-effective upgrade. And that's why these upgrades are so meaningful now. Every time we pulled off a miner with 42 watts per terahash or 44 watts per terahash and plug in one with 21 watts per terahash efficiency, we're getting tremendous amount of performance gain for a very, very marginal cost. So I think that's the second big one to focus on there. The third one is that we're still on track to hit our 12 exahash in June, right? So we are a little bit behind on hitting the 10. We do have, like I said, 9.5 installed, and we've got 7.5 operational. As soon as Paso Pay turns online, that'll be 9.5. And as we progress through these last 3 farm upgrades here scheduled for the first half of the year, starting with Leger, which is currently under process now, followed by, it'll be St. Hyacinth and Baie-Comeau. We're going to be on track to hit the 12. So we've got all the miners, we've got all the megawatts, we've got all the racks. Now, really, it's about the last couple of pieces pulling in together here for it to all culminate in 12 exahash.
Yeah, that's great, Ben. Obviously, from a growth perspective, the last 18 months really was about getting the debt reduced, which you did in a planned way. So full emphasis now. The spotlight now comes onto you guys, and along with another 3 or 4 other miners who've highlighted their growth strategy at the end of the year. So great to hear that you're still on track to get to 12 by the middle of the year. What does that look like going from 12 to potentially 21 in the last 6 months of the year?
Yeah, sure. So schedule for the second half of this year, there's basically going to be two large buckets of growth for the second half of the year. The first major bucket that brings us, more than halfway from 12 exahash to 21 exahash is going to be the 5 exahash that comes out of the Iguazu facility. That's 5 exahash is coming from a new construction, which is in process. That's scheduled to be completed at the end of Q4. And so we're going to have 5 exahash, which is coming on towards the end of the year. But the other ones, it's the other, few exahash, about 4 exahash is coming from farm upgrades and expansion. So we've got a farm upgrade currently taking place in Baie-Comeau, but we also have an expansion in Baie-Comeau, which is scheduled for September. And we've got more farm upgrades happening in terms of Argentina is scheduled to be upgraded. Washington State is scheduled to be upgraded in Q3. And you have the Baie-Comeau expansion. So between the Argentina facility, also the Paso Pe site, the existing Paraguay site is also going to be upgraded in Q3. So the two LATAM farms, which are already up and running, they're going to be upgraded kind of at the end of Q3, beginning of Q4 timeframe. So we'll see an increase to around 15.5, 16 exahash, with all of those other farm upgrades completed. And then we'll have the other 5 exahash coming from the new site that's scheduled for the end of Q4.
So in terms of upgrade, what we're saying is removing some of the less efficient miners, putting these new miners in which are more efficient, use less power, so you can actually gain more exahash from literally the same facility, aren't you?
Correct. So we get a lot higher energy efficiency, which means that, out of the same 50 megawatts or 100 megawatts or whatever it is, you're getting more hash rate out of those 50 or 100 megawatts.
Yeah. And what's the sorry, just one more little bit to this. On the mining machines that will be replaced, is there still a sort of a value on those to sort of like to resell, or can you use them in the same way other miners have used them if the time arises when profitability means that you can put less efficient miners back on the machines, maybe underclock them and still make a margin?
I mean, it's a great question, Anthony. What I always describe miners as is a leverage long bet on Bitcoin. And what you need to understand is that, in the event Bitcoin price doubles from here, right? Let's say we're at 70K, Bitcoin price goes up to 140K. The S21s and the T21s that we bought are going to go up in value along with the Bitcoin price and the rising mining economics. But the miners that will go up in value the most are the ones that are discounted the most today, right? And so that means it's kind of your S19J Pro to M30S generation that you're looking at. Those are ones that are trading at a very, very low value compared to where they traded at 12 months ago. People are discounting them a lot, which means that if the price were to double, well, the S21 might go up in price, let's say 50%, an S19J Pro actually might go up in price 3 or 4 times, right? Like that's the kind of relative math that you're looking at. And those numbers are not, actual, they're just kind of speculative numbers thrown in there, but that's how that plays out. So there's always a potential to do that. I mean, I know the last time when we had the halving event back in 2020, one of the things that we did was we bought S9s at $20 a piece. We bought thousands of S9s at $20 a piece. And then a few months later, about a year later, we were selling them for $500, right? So we bought them for $20. We plug them in. We're generating, we're generating free cash flow. We're operating them profitably. They pay themselves back in no time because it costs $20. It costs more to ship the unit than to buy the unit. And then you're flipping them, for a massive return later on. You couldn't have done that with an S19J Pro, at the beginning of 2020, but you could do that with the lowest end. So there's always a market for these miners, even if they're lower efficiency. But it's a very, very different kind of energy situation that you're looking to monetize. Like even recently, I was speaking with a group that's running S9s in Australia on solar panels, right? And so, here's a bunch of things that you never thought would be working together. Australia, solar panel, Bitcoin mining with, at this point, an 8-year-old Bitcoin miner that survived 2 halvings. I mean, it's a pretty incredible story, but the reality is they've got so much, so many, megawatt hours that they're generating out of these solar panels that they're not able to sell, that any ability to monetize that energy, any ability above zero is worth it. And so they're looking to monetize the most units of megawatts with the cheapest hardware, right? Because that enables them the greatest ability to scale out this kind of.
Will this be a potential market for you to move into if there's that much power available? And Bitfarms are renowned for moving into other not just in the same other countries. So it's something you could focus on.
So
Because at the end of the day,
it's a
it's
very
about
different
keeping.
business. Yeah, it's a very different business. I think it could have room in a potential Bitfarms portfolio, but you're talking about uptime 10%, right?
Oh,
So you wouldn't want to send an S21 or a T21 down there, right? You want to send those to the best facilities where they're getting the most uptime. But like our M30S generation would work really well in a intermittent solar. They're incredibly reliable. They don't require a whole lot of maintenance. They survive in very, very harsh conditions. There is going to be a use case for those miners, but it's going to look very, very different than the action that they've seen on our state-of-the-art racks for the last 4 years. They're going to go into a facility that looks very, very different than a Bitfarms facility.
Hey, whatever works. Lots of sunlight in Australia, and it'd be a great place to visit as well. Ben, I wanted to ask one quick follow-up on the machines, and then we're going to get into some of the current events here. You had mentioned the T21s during testing were performing 20 to 30% above spec. Kind of a two-part question, I guess. Number one, are you still seeing that when they're in active hashing production? And secondly, was that factored in at all to these growth targets and any of the metrics you guys have shared, or would that kind of be icing on the cake at this point?
So it's a great question. Bryce, there's a few different layers to that. So one, like we bought the T21s instead of the S21s. And I think we were the first pubco miner to do that. I know that amongst a lot of our peers in the industry, you just buy the best miner that you possibly can, at that time. And that's what you do. We have a different approach here at Bitfarms. We actually think that the premium is not warranted on the best miners out there. You pay a significantly lower premium to kind of go like T-1, T-2 from the best possible miner out there. That's always the approach that we've taken. And you generate higher returns. You have a lot healthier capex as a result of not paying those excessive premiums. It's what we did with the Pro Pluses last year. We grew with Pro Pluses for half the price of XPs. And when you look at the T21s have a lot of advantages, especially when it comes to the aftermarket firmware and the extra potential that you can unlock out of them. So the T21 is just like an S21. Similar chips. They're just kind of a lower bin of those chips. But what it has is it's got a power supply unit that's not rated up to 4 kW. It's rated up to 6 kW, and it operates in 3 phases. So a couple of very big benefits from that. One, I save a whole level of step-down transmission in my facilities. So I now have an actual efficiency gain because I'm no longer having the same sort of less efficient transmission within my facility from outside to the miner level. Second thing is that it actually makes things run a lot smoother and cooler to be running them at those higher voltages. So we're getting a better quality infrastructure. We're getting higher efficiencies and better performance out of our infrastructure, and we're able to push those miners harder. So when we have our 21 exahash target for the end of the year, there are some situations where it takes into consideration that we're pushing those miners harder than the 190 stock terahash. That's primarily in Quebec, where we've got very cold temperatures, and we've got these facilities that were designed for micro-BT miners. So they're very much more energy dense than Bitmain miners are. And so the facilities are designed around a higher level of energy density. We're cranking those miners up a little harder. The miners that are going down to Paraguay and Argentina, they're not being cranked up. They're just going to be running there at that kind of lower 190 level, which means that in the situation where we always have an active corporate development team, we're always looking at more and more megawatts and new site acquisition opportunities or development opportunities. If there was an opportunity for us to acquire more megawatts and a significant amount of more megawatts, we could get more exahash out of the equipment we already have coming than 21. So there's the miners are doing really, really well. The miners that we're running more, they're doing between 230 and 245 terahash when they were spec'd to do 233. So for most part, yeah, those are outperforming. And these are miners that we bought for 190 terahash, right? And now you're getting, let's say, 240 terahash out of them. So now we're getting a full 53 terahash out of that miner. We've paid $2,660 for that 190 terahash miner, and that comes out to $14 a terahash. But if you divide it by 250, you're coming out closer to $10, right? So it drastically improves the capex for our build outs, the return profiles for all of that growth. And it does mean that if we do get more megawatts, we have this kind of spring loaded capacity to readjust our miner deployment schedules to get even more hash rate out of the equipment we've got coming.
Great. Really good answer. Thanks, Ben, for going into detail there.
Ben, just going back to the May update, and obviously this was the first full month now that we've gone past the halving. So April's update included 19 days of the previous halving. So we've seen obviously the Bitcoin comes down. You're the first mining company every month to literally put your results out there ahead of all the other peer group. So with the revenues this month at 10.5 million, I think it was like 16.3 last month. That you can see that sort of drop there about 35%. What's your is it expectation now? We're not seeing the difficulty come down, so we're not seeing miners come off the network like that was thought about 4 or 5 months ago before the halving. Generally, the less efficient miners will come off, but we're not seeing that. How are you feeling now as a miner in terms of the global hash rate and what you can produce? And how does that fit in with what you were planning to, or your expectation post halving?
Yeah, it's a great question. And I think last time I was on the show, we actually talked about our expectations, post halving, pre-halving. And my expectation was it was going to be like a single-digit percentage, if anything, that drops off the network, and there's a very good probability that we see no reduction, and that's more or less what took place. And the reason why you can have that kind of fundamental, data-driven analysis there is just because we understand how miners operate and what determines operating decisions for miners. And really, if you are a miner who's responding to cost inputs, right, then you are a miner who is going to be adjusting, right? And at 5 cents per terahash, that's the level where I always thought that we'd see some level of market resistance, right? You go below 5 cents, you're going to see miners slowing down, underclocking, slowing down their build, whatever that might be, turning off old miners. But that gets seeded out, and there's a self-healing mechanism here. So every time a miner turns off, it's just that much more of an incentive for every other miner to leave their miners on, right? And so I'm still optimistic here on hash rate. I think what we see is that these cycles are very, very consistent over the several halving cycles that we've seen before. And usually what you see right after a halving is you kind of see like a flat period. A flat period where the market adjusts to the new reality. And I think, really going into the halving, it's very easy for people to panic and to be afraid because, it's a scary event. Top line revenue getting cut 50%. Like that's usually the extent of what people's understanding is, and they don't understand all these kind of other dynamics that take place to self-heal the network. And really from the miner's perspective, we operate on this kind of cost-driven approach, right? If our cost to operate the miner is less than the revenue, then you should turn off or underclock the miner, right? Now there's certain limitations because there are, things are built on a monthly basis, difficulty adjust, roughly every 2 weeks. Like there are a few lags in the system, but especially as people move more and more towards, I think, energy trading in the US, which is a lot more responsive. Like this is a feature that will get played out more and more, and you can start getting pretty clear about, hey, what's the expected cost of electricity and energy efficiency that you start thinking that people are going to have to respond to beyond that. And then if you can position your company and your operations at a level that's far beyond that point where you think the market's going to react, that's how you hedge out yourself from the market volatility.
So you expect to see more and more of these hedging techniques being utilized by the North American miners? Because I spoke with Nick Hansen from Luxor a few months ago, and I asked him sort of like, how many miners have been, chatting to or really keen to set the products, and there wasn't a great uptake at the time, but post halving, it's probably more prevalent now to start thinking about how you can mitigate some of the risk going forward. Maybe I know Bryce will come on to a question about what you're doing on the sort of synthetic HODL, but on from the production point of view, it for the last probably 6-7 months, it's what we've seen is you're not selling all your production, you're just sort of gradually increasing the HODL. So you obviously feel from a strategy point of view, maintaining a level of HODL is the right move. And probably half the miners are in the sort of HODL position, the other half are in the we'll sell every day and grow in that environment. But by selling the bulk of your production, are you not seeing what the likes of Riot and say CleanSpark, who've been aggressively growing their HODL probably the last sort of 6 months as well?
Yeah, I think there's, especially in a post Bitcoin ETF world, certainly asking the question of whether or not a miner should have HODL is a valid question, right? Because if the investor wants to have just the HODL exposure without the counterparty risk or the execution risk, they can get it now, right? They can get it directly through an ETF. There's even a few ETFs that will offer leveraged exposure. I think there's like a 2x Bitcoin ETF or something like that, right? So, that's certainly a valid question. I think that when it comes to the miners and the mining companies trying to, establish their position in the market, understanding the investment thesis of an investor in a public mining company is important. And, from my perspective, like I wouldn't expect a new investor that comes over to Bitfarms and who has never heard of Bitcoin to invest in Bitfarms, like no matter what I tell them, right? Like the kind of people who are going to invest in Bitfarms or another miner are somebody who's already made up their mind on Bitcoin, right? If you haven't made up your mind on Bitcoin, I'm not convincing you on Bitcoin mining, right? There's a certain series of events that need to happen before you're in this world of public Bitcoin miners. And I think once you've made the made the case in your mind as an investor that Bitcoin is interesting, you don't even necessarily have to know how or why or to what extent or to when, but to think this is interesting enough that I want to get exposure to it. Then your next question is, how do you get exposure to it, right? And you look around across the universe of vehicles out there. If you're looking, you can buy Bitcoin on an exchange and you can hold it there, or you can pull it off the exchange, or you can buy it on an ATM and you can, put it on a ledger or a Trezor or a cold card. Like, you can buy an ETF, you can buy a public miner, you can buy a cloud mining contract. There's all these different ways that you can invest in Bitcoin and you can get that exposure. I think what the miners need to do now is they really need to find their new spot in this new world with Bitcoin ETFs. I think having Bitcoin on the balance sheet is a valuable asset. This is something that helps to align our long-term interest to drive shareholder value with something which is appreciating over the long term, right? The hash rate doesn't appreciate over the long term in the same way that the Bitcoins appreciate in the long term, right? So I think there's going to be a process for companies to really figure out their path, and there could be that companies um, go very, very different ways. I think right now you have three categories of companies. You've got companies who will dilute shareholders to fund OPEX, right, and save every Bitcoin that they mine. That was certainly a very popular strategy the last bull run in 2021. Basically, every public miner did that. You can sell every Bitcoin that you mine on a daily basis. You say, look, we're a mining business. This is how we generate cash. You need cash. We're going to sell every Bitcoin we mine. And then I think you've got the third category, which is where Bitfarms falls into place. And Bitfarms is trying to approach our Bitcoins that we mine and the revenues that we make out of our Bitcoin in a very disciplined and systematic manner. We're saying, let's fund the business, right? We are a Bitcoin mining business. We have bills. Let's fund the business, right? So sell enough Bitcoins to fund the business. Then after we funded the business, how do we give the investors the exposure or the best quality exposure that they're looking for, right? Do we use the remaining cash to fund growth? Do we use the remaining cash to buy long dated calls and put them in our synthetic HODL? Do we use remaining cash and just put it into Bitcoin? I think we are taking this process a little bit differently from most of the peers, because one, we're not going 100% of the way, one or the other. We're saying, look, we're a business. We mine Bitcoin. Let's run the business responsibly. Let's pay for the business. If we can't even pay for the business, what is the point of running this business in the first place, right? We have to be a profitable company. And then the question is how do you provide your investors with the best exposure beyond that? And we think our synthetic HODL program is a really good way of providing investors with better quality exposure. It's very capital efficient. And if you're buying Bitfarms because you believe that Bitcoin is going to go up, these options provide a very, very efficient means to get exposure to that. So I think it plays out a very well diversified portfolio of Bitcoin exposure. And I think you're going to see more and more companies adopt it.
Yeah, it really does make sense, Ben. I love the diversified approach there. And we do have a question about that synthetic HODL, so we might as well just get into that right now. I promise you guys, we do have questions about the CEO update and M&A activity coming, so hold your horses there. But Ben, in terms of the synthetic HODL, I know you guys have shared the number of contracts. So these are essentially long-dated call options, just like you would buy on any publicly traded company. You've released the number of calls you guys have or option contracts you have. Are you able to share any details about strike price or about the total value invested in the synthetic HODL program?
So we haven't put out any more specifics beyond the total number of long dated calls that we have in the program and how that's kind of changed over time. What I can tell you is that the first time that we bought long dated calls, Bitcoin price was around 30K, maybe even less than 30K. It's a while ago, but this was kind of in like this is well before we broke 40K for sure. This was in like the 30K to 25K range. And options have kind of a two-way function. They've got kind of a long dated function. They've kind of got the daily function. So the long function of this is saying, hey, this enables us to maintain the upside on these Bitcoins for a fraction of the price that we would from just owning the Bitcoins directly, and able to continue to fund the business. And if we do have a downturn in the market, there's no margin call, right? On these long dated calls, it just expires worthless. Now, if it does work out, in the long term where price is going up, the value of the option should go up faster than the underlying value of the commodity itself, which is what gives you that higher beta and that leverage. But there's also kind of like a daily bleed element, right? So as time passes, the value of those options, disappears, right? Because you're losing, it's getting closer and closer to expiry. So there's kind of a couple of different factors that are pressing there, which is why we don't comment publicly on more specifics, because that number is literally changing by the second. And it just kind of makes it a very, very difficult position for us to continue to report and for people to track and to understand. But, I say that with saying that, we're buying these because they are more efficient vehicles to maintain upside on the coin, right? Like if you play it out, let's say, we're mining this Bitcoin at 70K. Let's say we mine 5 Bitcoins. We sell 4 Bitcoins. We now have 1 Bitcoin remaining. We take that Bitcoin, we buy 5 long dated calls at an average strike price of 0.2 Bitcoins per strike. So now I've got 5 long dated calls for the price of that 1 Bitcoin. Now, let's say Bitcoin price goes up. Let's say Bitcoin price doubles from here. Those 5 dated calls, they're not going to be worth 5 Bitcoin, but they're going to be worth much more than the 1 Bitcoin that I originally put in, right? They're going to be worth somewhere between like 1 and 3 Bitcoins, probably, right? So they'll give you a return on your Bitcoin. Now, if the price stays flat, okay, well, I've lost my upside. The thing expired worthless, but I funded my business, right? And I funded my business at a much lower cost of capital than it's available to me via, debt or a private placement or something, very dilutive, right? Third, the price goes down. Okay, we lost the value again, but I still monetize those Bitcoins at that high value, right? So I didn't ride the value of the Bitcoin down. I still monetized it at 70K, right? I monetized at 70K times 4 instead of 0 times 5, and then selling that, 35 times 5 now, right? So there's a way that we can use these instruments to kind of engineer some functionality into our company, right? And to try and provide the investors, I think, with better quality exposure to Bitcoin.
Yeah, really, really interesting. I would expect to see more of that become kind of common play in this space. Appreciate the breakdown. Obviously, the time decay and theta are kind of inherent to options as well, but they do provide that leveraged upside. And for a long time, Ben, we were actually calling Bitcoin miners kind of an option play on Bitcoin. And now
They are.
she's seeing option chains come out on Bitcoin, which is great. Anthony, I'll let you jump into the big 2 exciting ones here. We can move along unless you have any other questions about fleet upgrade or
Bryce,
hardware or any of that.
if we could jump on the Bitcoin miners or options, like, because that is a great point. It's something that I talk about a lot, like, and it's something that I think your audience will probably resonate with your audience here. People don't buy Bitcoin miners because the price of Bitcoin's at 65K, right? They don't buy Bitcoin miners because they think the price of Bitcoin is going to go down to 50K or is going to stay flat at 65, right? They're buying Bitcoin miners because they're saying, I think Bitcoin's going up. I think it's going to go up to whatever your number is, 80,000, 100,000, 150, 250,000. I think it's going to do it by this date. And then they're saying, if that happens, what is Bitfarms going to be worth? Right? What is the probability of all these things occurring, and what would Bitfarms be worth at that time? What would Marathon be worth? What would CleanSpark be worth? What would Riot be worth? Right? Those are the kind of calculations I think investors are looking at. And I think when you look at kind of the vehicle or the universe of vehicles out there, I think this is why we're so excited about our growth plan for this year, because I do think that if you're looking at that kind of option math of, hey, if Bitcoin reaches this price by the end of this year or the end of next year, like, I'm really happy with where where our expected value is going to be under the growth plan, that we've laid out. I think it's very strategic, and certainly there's been a lot of events happening over the past couple of weeks, which we'll get into here. But that just in many ways provides opportunities for some investors maybe to come in at a discount, because there's so much potential here in our company and our growth plans for the rest of the year. And I just don't think it's properly priced in.
You mentioned the investors considering this. I mean, but what's your view on the market looking at the mining companies? I mean, there really seems to be a disparity in terms of how the market is valuing the North American miners, ones that I focus on. Looking at what your current exahash, and that's taken away you've gone up to 7.5 of energized hash rate today, but it was 7 last month. So using the 7 is still there. I mean, I did a calculation based on enterprise value and looked at all the mining companies, and you're coming out at under $90 a terahash for the current hash rate as at the end of April. When I do a comparison with, say, CleanSpark and Marathon, they're like nearly double that figure, which means that the market's giving them a real premium to their value, more so than the sort of like the hash rate that they're showing. And we've only just seen, I think, Iron in recent times, when they announced the growth to 30 exahash, that gave them a tick up there. Do you feel that the market is valuing miners who would deliver hash rate, or do you just think that it's still the market's in its infancy, not really sure about how to value?
I think the market certainly does not know how to value the miners or how to value hash rate. I think that is very clear. The market clearly latched on to kind of exahash and watt per terahash metrics very early on, because I think they were pretty easy to understand and they were pretty intuitive. It's like, hey, the more exahash you have, the more Bitcoins you mine every day. The lower your watt per terahash efficiency, the cheaper it is to mine. And I think that is, how people enter into the space. And I don't know how much more sophisticated beyond that they really get. There are certainly some players in the space who do the math and they do the work and they do the education, but you look around the space, there's no even footing, amongst the different companies out there. And it's hard to explain why that is. If the market was highly, healthy and functional, you wouldn't see such an uneven, group of valuations across, what are largely very similar companies. But I think it's because the market doesn't understand a lot of what's going on, that you do have these gaps in valuation. And I think that's going to be there for a while, Anthony. I think there's a lot of education that needs to happen. I think there's a lot of standardization that needs to happen in the industry. Our CFO Jeff Lucas likes to make the joke. There are 30 publicly traded miners and 35 different definitions of adjusted EBITDA. But you look at that for hash rate, and you have the same thing for hash rate, because you've got installed hash rate, active hash rate, energized hash rate, operational hash rate, you've got deployed hash rate, you've got corporate owned maximum hash rate. You've got all these different ways to even describe hash rate, and it's very, I think, difficult for people to sort through. So definitely some standards, I think, would help make things more direct comparison. And there's also, I think, a big difference between the companies who are out there trying to grow their business in a way that's responsible and in a way that's driving value for shareholders, versus companies who are out there just doing the marketing. And I think there's definitely bits of both here. There's 30 different companies, I think, as publicly traded miners, you're going to have a whole range of kind of different companies who are trying to serve different investors and different, investment theses and niches and different demographics and have different objectives. And you're going to see the whole gamut of things.
Yeah, I mean, I'm starting to think the analogy to use when looking at North American miners is looking at Premier League football teams, and it looks like you might be the biggest supported team in the world, but you're not the best operator of the world. You've got the fan base behind
Yeah.
it. That's probably the better analogy, because for the life of me, I can't work out, why there's such a. I can understand, giving a premium, but the size of the premium that some of those miners have got, and yes, they've got hash rate at the moment, but bear in mind, by the end of this year, we'll see, 5 miners in excess of 5 or 6 miners in excess of 20 exahash, and we go back 2 years ago, there was only one miner in double figures, and that was Core Scientific. So it's miners have grown fanatically over the last, well, they're expected to grow fanatically over this next period now. I mean, there's been actually, in terms of growth from January 2023 to today, which is the last 18 months, for a lot of miners, there's not been significant growth in terms of hash rate. In terms of percentage growth, yes, because every miner was low, so you've got to double your hash rate. But we'll see some. I mean, you guys started the year, and we'll finish, with an extra 15 exahash by the end of the year, where you started from. I mean, that's a significant growth. The same with some of the other companies as well. But I just look at the way that the valuations then, and it does get to me. I mean, you operate. We know that your operating position the last 3 years has only been equaled by Hive Digital. I mean, you two miners both there seem to have really good optics on a monthly basis. You've got the debt down to 0 now, so that's another tick in the box there. The growth thing is the key. That's why we want to see it, and it's good to hear about how you're going to get to the 12, because the one thing that probably is the sort of against the fact that you got down the debt, you weren't able to grow. I mean, in terms of growth for the last 18 months, 2 years, it hasn't been in terms of, it hasn't been massive growth. I think people expected more. I mean, we sat next to each other 2 years ago in London, and I think the hash rate target for 2022 was at one point was 8, and then it got reduced to 6. So things can change, and this is going to be an interesting dynamic now, because very, very rare miners achieve their growth. It doesn't happen very often. You can go back through the last 3 years. There's probably less than 3 miners actually done what they said they were going to do in one of those years. Not every year, I'm saying constantly.
For sure.
So this is what Shell's going to see now. All these massive targets that got put out there, and we did a podcast a couple of weeks ago on the sort of like, who did we feel was going to get there, who's not going to get there, because there's some big numbers. But it's great to hear that the 12 is still on track till at the end of June, and then you're going to get towards the end of 2024 the big rise in that sort of like last month. So we'll be watching with bated breath on that particular issue.
Yeah, I mean, operating at this scale is a lot of moving pieces, and I think if you haven't run a business like that, it's really easy to be like, okay, you got a miner, you plug a miner in. But we're talking about dealing with tens of thousands of miners. I mean, over the course of this year, we're gonna rack over 88,000 miners. We're gonna de-rack about 43,000 miners. I mean, that's physically interacting with like 125,000 miners. The logistics that are associated around the planning of all of this is incredible. Just kind of give you a context of some of these things. Like, we are now DHL Canada, not DHL, but we are now DHL Canada's largest freight customer. They have never moved as much freight as they are currently moving for us right now, moving the T21s down to South America. Wow. The president of DHL Canada came into our office because he was like, "What is going on here? Why are you guys moving so much equipment down into Latin America. I mean, the routes didn't even exist, right? So we had to work with DHL to create more plane routes into South America to deliver our miners on a schedule that aligned with how we're building out in Latin America. Like that's the kind of scale that we're talking about here. So, you know, when you're dealing with real world operations, things happen. Things are always going to happen. You know, you try and build buffers and you know a bit of space right in between what you're promising and when you're going to deliver it. But obviously things are going to happen, and if the economy has changed dramatically, sometimes it also means that you should change your plans, right? And so I think a lot of people, you know, are you know, a lot of people hold up on 2021 growth targets that people never hit, but it's because the math completely changed, you know, and at some point you have to stop throwing good money after bad money, right? And that's what happened in the 2021 and the 2022. So I think what we've done here is a little bit different than most of the peers. You know, what we've done is we've gone out there with the megawatts that we had and the megawatts we had our pipeline for and the infrastructure we had. We went and bought every miner that we could possibly use to maximize what we have in the assets. We didn't go out and buy, you know, hundreds of millions of dollars worth of miners without a place to plug them in, right? Like that is a position that, you know, certainly enables you to provide higher guidance because you have the contract that supports it. But now you're also in a position where you're paying hundreds of millions of dollars that you diluted your shareholders to fund this investment. The asset, you know, is either generating revenue or it's not. And, you know, every day that it doesn't generate revenue is a day that it will never be able to make up in the future. So it creates this economic incentive where you really need to start paying more and more and more to plug them in faster and faster and faster, because every day is a missed opportunity cost, right? We don't have that at Bitfarms in our growth plan. And even with, you know, the latest additions that we've been announcing here for megawatts, you'll notice that we haven't increased our exahash guidance on that. It's because we're still working on the plans for the miners, right? First, we build out the infrastructure and we take that infrastructure approach, and then we optimize the asset with the best miners and the best investment plan. So we take a little bit of a different approach in that sense. But certainly accurate, you know. And the other thing I'd say, you know, Anthony, is that, you know, I think we've been discounted a lot for saying that we will not grow for growth's sake. I think that is something that, you know, is fiscally responsible, but it's also not what a lot of people wanted to hear. What people wanted to hear was more growth, more fast, you know, all of the time. And in reality, it doesn't always make sense to invest money. It doesn't always make sense to grow. You know, like dollar cost averaging into some businesses is actually a bad plan, right? You know, you want to wait until the odds are in your favor, and then you want to invest heavily, right? Which is what we've done. So you don't want to be you don't want to be growing linearly in this space, right? You want to be growing strategically. And that means that, you know, you shouldn't be, if you're looking to grow 2x every single year, like that is a very unsustainable growth rate for any industry, including our own, right? If you're going to double your megawatts and your hash rate every single year, like best of luck. It's a goal that becomes very, very hard to accomplish. So, you know, I think all those things could just need to be taken into consideration. Yeah, complicated
makes
space.
sense. And I like that strategy of kind of picking your spots rather than just continually buying at all costs, regardless of the economic factors. Now, shifting gears a little bit here, Ben, this is probably one of the most requested questions we've had from our subscribers, our Patreon groups. It's really to do with the CEO situation. How is that coming along? Do we have an expected appointment date? Are you able to share any information at all with the viewers about how that process is going and kind of how that plays into this strategy moving forward?
Yeah, understand it's, on the minds of a lot of investors right now. I can't provide a whole lot of details. What I can say is that, the board does have a search process ongoing. We have engaged, an external search firm about 2 months ago. Numerous different candidates have been interviewed and are continuing to be interviewed. So, the search process is underway. We are looking for a candidate who's going to maximize value for our shareholders. And, we are seeking the best qualified candidate, wherever they come from, and we remain open-minded about potential candidates. So I can't provide, any assurances or any dates saying that, hey, by this date, it's going to confirm to be done. And this person is going to be the CEO. I can't provide any information like that. But what I can say is that, the process is being treated very seriously. There's a lot of very smart and intelligent and capable people involved in the recruitment and the interview process. And we're going to find the best qualified candidate.
Has the impact of the recent M&A activity made any delays to this process? Because I think there was an announcement that it was going to be in the next few weeks, and we seem to be getting close to that date now. So as with what's happened, what we've seen publicly announced in the last week or so, with the likes of Riot Platforms involvement, has that had any impact on delay and anything like that, or is it everything is still going as planned?
So, I mean, we've got a special committee to deal with the riot situation, the riot interest, and we've got a special committee for the CEO search. Both things are still absolutely moving forward. We've got good legal advice, who's doing most of the work in terms of the riot matter. And most of the executive team is really just focusing on growth and execution here. As on a daily level, for 99% of the company, it continues to function as is and as usual. The vast majority of people within the company are unaffected by the riot bid. As for potential external candidates, I know that the interviews are continuing. I know that the recent news of the riot bid has not slowed those interviews down any. Those still are scheduled and remaining in progress. So I don't believe it slowed us down. I don't believe it's really negatively impacted the process. This is just one more challenge for us to manage. And personally, I like to take like a David Goggins approach to life. So it's just one more challenge to deal with, and we're going to carry the boats over here at Bitfarms, and we're going to get it all done.
Hey, that's a great approach to life. I try and do the same thing, Ben. It's a lot easier than being stressed out and worried all the time. I wanted to just probe a little bit on the M&A stuff. Feel free to just say you can or cannot comment on this. Obviously, Riot came in with a $2.30 price. Bitfarms is now trading above that price. Are you able to share any of kind of the discussion that's been going on in terms of M&A or any of the next steps that investors should be watching for?
Yeah, I can't, speak too much in terms of specifics, but what I can say is that we had obviously a careful evaluation of the bid. We have a special committee and we have legal advice. What I would say is that the proposal really we don't believe that the proposal accurately reflects the long-term growth potential of this company. And really undervalues that growth potential, not just in the long term, but in the short term, right? Like in the very much immediate future. And so that's kind of just where that is. We think we're worth, we think it very much undervalues Bitfarms.
Sure. Yeah, I appreciate the sensitivity of the topic, and it's great to at least hear the details that you are able to share there.
So Ben, we saw on the update today you've received an element of the VAT refund, and you're due to get some more of it in the next few weeks. Can you just briefly explain where that money is going to be prioritised?
Yeah, that's probably all going to go towards growth. So we've got roughly about 3/4 of the VAT that we expected coming back to us before the end of this quarter is already received. We still have payments ongoing with Bitmain for our miner deliveries. We have sufficient liquidity to pay for all those miners, but yeah, that cash is largely just going to go to those new miners that we're buying.
Amazing. Yeah, I know we've covered a lot of ground here today, Ben. It's been a great interview, almost filled up the full hour. We just wanted to give you the opportunity to give us your closing thoughts, if maybe there's anything we didn't touch on, or kind of upcoming catalysts for Bitfarms.
Yeah. I think there's a lot has been going on over the last couple of weeks for Bitfarms and our shareholders. To kind of wrap up closing thoughts here is that I continue to remain very optimistic and very bullish about the company across basically any sort of time horizon you can think of, short, medium, long. We've got what I believe are the best growth plans announced, and we have one of the best teams out here in the industry executing on them. So this is a tremendous time for Bitfarms. I understand there's a lot surrounding us right now, but please know that for the majority of this company, we are continuing on just as we've always continued on as miners and as operators, and we're going to continue to rack, we're going to continue to de-rack, we're going to continue to plug in more miners. And we're going to continue to focus on executing towards the 12 and the 21. Personally, I am in Montreal, and I will be here in Quebec for basically the next 3 or 4 months, with the exceptions of a couple of trips, to oversee the last stages of our farm upgrade process. So I'm here. I came out personally for the next couple of months to oversee our last few farms being done, and just kind of work on what other sort of optimizations and tweaks we can also use to improve our site. So the team remains committed, optimistic, and aggressively working towards our targets here of 12 and 21.
Perfect. Well, hopefully you can take a break from Quebec, come visit us down in Nashville next month, Ben. But it's always a pleasure chatting with you. We learned so much, so insightful, and such a voice in this space. So thank you for your time. Thank you for walking through all these questions. You guys, if there's anything else we didn't get to today, feel free to leave it in the comment section below. As always, hit the like button, follow the channel if you don't currently, and we'll see you in the next video.